Hey, in this video, we're going to cover a topic that has an incredible amount of confusion and misinformation. And what we're talking about is credit scores. Now, maybe you've been somebody who's had this experience. You've checked your app with Credit Karma, or maybe even directly at the credit bureau with TransUnion or Equifax, and you see a certain score, let's say it's 750, and then you end up trying to get pre-approved for a mortgage only to find out that your credit score was significantly lower, to the tune of 150 points lower. Now, this happens to people every single day. At the end of the video, I'm going to show you where you can actually get your real scores, where you can actually look at the apples to apples comparison, where you will be able to see the exact score that any lender is going to be using in a loan application. Let's clear up the biggest misconception. Number one, there is not just one credit score. The reality, there are a lot of credit scores. Now, only a few of the scores matter. Now, what are those scores that matter? This is actually another misconception. The scores that matter are transaction-specific versions, which means an auto lender is going to have an auto version of a score, a credit card company is going to have a credit card version of a score, and a mortgage lender is going to be using the mortgage lender version of the credit score. Now, what the confusion is with all of that is none of those transaction-specific scores are ever given out to you for free. Here's where the confusion sets in. What we're going to talk about in this video is what are those scores that are given out to you then? And we'll cover Credit Karma, and I'm also going to go in depth on every single credit card provider that's out there. We're going to tell you what score they provide to you and whether that score is worth anything. Is it useful? What should you do when you look at that score? Is it good? Is it bad? Does it mean anything? Stay tuned, because after this video, you are going to know way more than the average consumer, and you're going to have the information to know where to go and how to navigate this financial system in the most efficient manner possible. Okay, so let's tackle the biggest elephant in the room, and that's going to be the Credit Karma credit score. You check your Credit Karma score, and it shows that it's like a 750, and then you go in to try and get pre-approved for a mortgage, and the loan officer tells you that your score is 640 or 650 or maybe even 600. Because I've seen variances of up to over 150 points. And then the question comes out, which is, why are these scores so different? And what is that score that Credit Karma is providing me? So let's jump into that. Credit Karma provides you a VantageScore 3.0. Now, what is the VantageScore 3.0? VantageScore 3.0 was created by the credit bureaus. VantageScore Solutions LLC is owned by the three major credit bureaus. Now, why did they create this credit score? Well, because they couldn't come to an agreement with terms for royalties with FICO, otherwise known as the Fair Isaac Company. That's the company that has 90% of the market share when it comes to credit scores, which means that if you're in any kind of a major transaction, a mortgage, a car, even credit card, the odds are they are using a version of a FICO score to make that lending decision for you. So now what ended up happening? This is during the period when credit monitoring started coming out, and it was a subscription-based service, a real big revenue generating product for them. The problem that they ran into is a lot of people wanted to pay for credit monitoring, but they also wanted to know, what is my credit score? And since the credit bureaus couldn't come to an agreement with FICO, they created their own score. Now, how did FICO react to them creating this score? Well, in September of 2006, FICO sued the credit bureaus over this credit score. Ultimately, they ended up losing. A lot of their charges were dismissed, and VantageScore was allowed to continue. So where does that leave you? Where that leaves you is in a state of mass confusion. And the reason why you're in a state of mass confusion is because you can go directly to TransUnion right now. You can take a look right here. You're paying for monitoring directly from a credit bureau like TransUnion, and they are also giving you VantageScore 3.0. The same goes for Equifax. If you pay for credit monitoring at Equifax, the credit score that it's showing you is the VantageScore 3.0. Now, what is the problem with VantageScore 3.0? The problem with VantageScore 3.0 is that it has an incredibly low adoption rate, which means that very few lenders, if any, are using it to this day to base lending decisions for you. Now, I've heard of VantageScore 3.0 being used in credit card approvals by some credit unions. I've also heard of VantageScore being used for rental applications in California. But when it comes to major purchases, such as a mortgage or an auto loan, VantageScore 3.0 is not used for a mortgage transaction. When it comes to an auto loan, there may be some auto lenders that use VantageScore. I've never heard of them, but predominantly they will be using a transaction-specific version of FICO for that decision. The other problem with VantageScore, aside of the low adoption, is just that it is almost always significantly higher than the FICO score, which is what creates this mass confusion. I've heard dozens of stories where people check Credit Karma and it says 750 and they go in to get approved for a mortgage and the score is somewhere in the low 600. The difference in what you can get approved for from a low 600 to a 750 is enormous. And it oftentimes is the difference of being able to be approved or not. So what you want to do is understand what you're looking at whenever you look at any credit score, and also understand one of the other misconceptions is the score that your credit card company gives you. Some of the credit card companies give you VantageScore, some of them give you different versions of FICO. We're going to go in depth into every single one of these so that you know what credit score you're looking at. And as I mentioned, going to show you where you're going to be able to go to get your real scores so you have a true apples to apples. When you're armed with this information, you're going to be able to walk into a car dealership, or before you get pre-approved, you will know where your credit score is. So you're not going to have any surprises, you're not going to have any disappointments, and you're also going to be smart enough to be able to position yourself, take a couple steps beforehand, and put yourself in the best possible position when it comes to your credit score. Because when it comes to mortgages, it has never been more important to have the score as high as possible. So let's jump into where VantageScore 3.0 is provided for you. Number one, the most popular, Credit Karma. Number two, Credit Sesame. Number three, NerdWallet. Number four, TransUnion. Number five, Equifax. Let's jump into the credit card companies and let's talk about the big banks and let's see which credit score each bank is giving you if you're getting this from their credit card. Bank of America. If you have a Bank of America credit card and you check your score there, you are getting a report only from TransUnion and it is showing you FICO 8. FICO 8 is considered the most widely popular version of FICO. It's also considered a generic version because it's not transaction specific. When you compare it to the mortgage version of the credit score, FICO 8 will always tend to be higher, usually about 20 to 40 points, sometimes as high as 60 and 70. Is it a good score to look at and think that's what your credit score is? It does a much better job than VantageScore, but if you are wanting to get approved for a mortgage, it's way better to actually look at the mortgage version of that credit score. Now let's jump into Wells Fargo. Wells Fargo will provide you a credit report from Experian, and they provide you FICO version 9. FICO 9 is a little bit more advanced than FICO 8. There's a lot of things there that are more consumer friendly. The big problem you have with FICO 9 is it kind of got stuck in the middle because since FICO 9 has been created, it hasn't really been adopted. There isn't widespread adoption with FICO 9. And when it comes to mortgages, FICO 9 is not the version that's being used. And also we've got a newer version of FICO that has been released. It's FICO 10 and FICO 10T. FICO 10T is going to be implemented towards the end of 2025. Stay tuned for more on that video. As soon as any more information about that comes up, I will cover it in great detail. Now, let's move on to the next bank. Discover. If you have a credit card with Discover, Discover gives you a credit report from TransUnion and it gives you FICO 8 also. So this is the same thing. FICO 8 is a generic version. It is much better than VantageScore. It's a good indicator of where your credit score generally is at, but understand it is a completely different version from what an auto lender is going to use and the mortgage lenders. Now let's jump into Chase. Chase offers you a credit score from Chase Journey. Chase will give you a credit report from Experian, and Chase will also give you VantageScore 3.0. So what you need to understand is if you're looking at your credit score from Chase, you're looking at VantageScore 3.0. That's the same thing as Credit Karma, same thing as Credit Sesame, same thing as TransUnion and Equifax. The best thing you can do with this credit score, pretend you didn't see it. More on that in a second. Now, let's jump into Capital One. Capital One also gives you VantageScore 3.0. Capital One will provide you a score from TransUnion. And now we're at a point where I'm going to give you my take on this. Here's what you need to do when it comes to VantageScore. When you are looking at a VantageScore, first identify, are you looking at VantageScore? If you are, the single best thing that you can do, this is my opinion, is pretend you didn't see that score. The reason why I say that is because that score is only going to confuse you. It's going to give you an inflated sense of where your real credit score is. The problem with this score, as I mentioned earlier, it has an incredibly low adoption rate, which means if you're trying to get pre-approved for a mortgage, they're not going to use a VantageScore 3.0. The bigger problem with it is that VantageScore is almost always significantly higher than the mortgage version of the FICO score. So when you see it, then you didn't see it. Trust me on that. Now let's talk about mortgage lending and what credit scores are used in mortgage lending and who gets to decide that. The FHFA, the Federal Housing Finance Agency, is the governing entity that tells Fannie Mae and Freddie Mac what credit score versions are approved for use in mortgage lending. As of today, there is only one version of the credit score that is approved for use in mortgage lending. This is the FICO Classic Score. This score has been used for almost 25 years now. It is a transaction-specific score. It's based on the FICO Classic version, and each credit bureau has their own version of it, FICO 5, 4, and 2. The three biggest complaints against the Mortgage Classic FICO score are as follows. Number one, collection accounts can do a lot of damage. And the problem with the mortgage version of the FICO score is if a collection is paid or not paid, it will do the same amount of damage onto a credit score, and that can be as high as 90 points. That means that it can take a 750 credit score and bring it down to a 660 over one small collection. The second complaint, the dollar amount, the size of the collection does not have any impact on the score, which means you can have a collection for $40 hit your credit or $400,000 hit your credit, and it will do the same damage to your credit score, which is 90 points, which is huge. Going from a 750 to 660, it's a night and day difference in terms of what you can qualify for, or even if you can qualify. Now, the third biggest and long-standing complaint against the mortgage version of the FICO score is as follows. FICO scores typically require about 6 months worth of reporting history in order to generate a FICO score, which means if you're new to credit and you've just opened up 3 new accounts and you've had them for 90 days, you will not have a FICO score. This is why so many people have been advocating for competition into the space, and it's one of the things that VantageScore is proclaiming that it can do better than FICO, which is to score people that have less than 6 months worth of history. There has been changes where they have now approved 2 new versions of credit scores for mortgage lending, and they're slowly going to implement this. It's been difficult to implement this kind of a big change when it comes to credit scoring, especially in the mortgage industry, because they haven't done it in 25 years. And they're now introducing 2 new things, 2 new scores, and they're only going to be looking at 2 bureaus. They still do not have it figured out in terms of how they're going to rate this or score this for mortgage qualifying purposes. But what I could tell you is that VantageScore 4.0 is supposed to have machine learning abilities, and it's supposed to include items into the credit score that typically FICO has not been able to include, like utility bills, telecom bills, and rental payment history. And one of the biggest arguments that people have against FICO previously has been that there are roughly 30 to 35 million people who are credit invisible, who are not able to score with FICO, but would be able to score with Vantage, which means that you would be bringing in this many more buyers into the marketplace, which should help housing. Obviously, it'll drive demand, and it'll bring more customers into the market. Now, FICO has also advanced since that time. FICO 10T is a new version of FICO. It's the latest and greatest, and it has 2 key differences that previous versions did not have. Number one, trended data. Trended data is something that is used in mortgage lending, but it's not factored into your credit score. What is trended data? Trended data is simply where they look back in the past 24 months at all of your debt levels and your debt activity. So what this means is if you're somebody who has credit cards and in the last 24 months, your balances have just been increasing and you're only making minimum payments, you will be rated a higher risk because of that. Now, if you're somebody whose balances go up and then they go down and then they go up and then they go down, but you're generally able to maintain low balances, you will be rewarded for this and your score will be higher than somebody who's just making the minimum payments and whose balances keep going up. That's why it is really important to understand how to use your credit cards. I'll get to that in a second. The second biggest thing that FICO 10T has, which is better than the classic version of FICO, is as follows. Paid collections are no longer impacting into the score. And what I've noticed from looking at the old FICO versus 10T is FICO 10T will rebound a lot faster versus people that have had credit issues in the past, but are now doing well and are now doing better. So it's more forgivable as long as you are now cash flowing, which means if you've had major credit issues, whether you've had a life-changing event, whether it was medical bills, divorce, loss of income, as long as you are now doing well and you're demonstrating that ability and capacity to maintain and manage your debt, FICO 10T will score you higher than the classic FICO, which means that it's not going to be punishing you forever on items, which is also one of the criticisms against the classic version of FICO. My thoughts on VantageScore 4.0 is this. As a consumer right now, you're not able to get access to your VantageScore 4.0. Any VantageScore that's given out there is VantageScore 3.0. VantageScore 4.0, which was approved for use in mortgages, is not given out to free for consumers. And if I had any idea about it or thoughts on it, I would guess that it will also not be given out for free, which will also basically mean that when you're looking at VantageScore 3.0, just because they're now going to be using VantageScore 4.0 in mortgage lending, it does not mean that 3.0 score is going to be the same as your 4.0 score. So until that changes, I'll record another video, but please understand, even after this change, your VantageScore 3.0 is still going to be outdated and is still going to have incredibly low adoption. You're still going to not want to look at it. Finally, we get to the point where it's, where do I check my real credit scores? The single best place, in my opinion, to check your real scores is from myFICO.com. FICO owns 90% of the market share. There are two products that you have here. It's a subscription service. You have three options with myFICO. Number one, you can just purchase a report outright. I think it's something like over $60. There's no monitoring. You pay it once. It's a soft inquiry, which means it doesn't hurt your credit score. It will give you all of the most popular used versions of credit scores, including the new ones. So if you want to look at your mortgage score, it's there. If you want to look at all the versions of the auto lending scores, it's there. Some dealers use different versions. All of the auto lending scores are there. All the credit card version scores are there. And all of the newer versions are there, including FICO 9 and 10 and 10T. This is the most comprehensive source of credit scores that you will find. It is incredibly unlikely that you will find a lender that is not using one of these versions of these credit scores in a lending decision for you. Now, the other product that you have, for $29.95, you can sign up for a monthly subscription. When you first sign up, it'll give you access to all the scores, and then every quarter, it'll give you access to the scores again. Throughout that time period, it'll give you active monitoring and score alerts only on FICO 8, which is the generic version. For $39.95 at sign up, you'll get all your credit scores and you get monitoring for FICO Score 8. And every 30 days, you get to pull your credit report. It's a soft pull, doesn't hurt, shows you all of your scores. This is the most beneficial to people that are real estate investors, or maybe you're always purchasing cars and selling cars, or whatever you're doing. If you're always using your credit and you'd want to know exactly where your scores are, this is going to be the most comprehensive and the most powerful product on the market, bar none. All right, now we finally gotten to the point where we're at the end of the video. If you like this video, hopefully you guys have understood what are the key differences here and also my take on it. VantageScore 3.0, I'm not a fan of. You know where to go get your real credit scores. Pay attention to it. You also know what credit scores your credit card companies are giving you. If you're somebody who's not really doing a lot of deals and you're not planning on buying a house in a year or two, do you really need a myFICO subscription? I don't think so. I think you can get enough coverage by looking at the generic or different versions of FICO from your credit card companies. That should be enough visibility. Just always understand when you're looking at a VantageScore, understand what that score means. Don't ever be misled by it because it's not your real score. That's it for this video. If you guys have made it this far, thank you so much. If you want to hit like, share, subscribe. If you have any comment, any questions about these credit scores, I would love to hear them on there. Please. Thank you so much. Catch you guys on the next video.